the difference between a winning trade like this and a losing trade like this? Now let me tell you that there's a lot of key several factors to the difference between a winning trade like this and a losing trade like this. So stay tuned to find out in this video. And my name is Ari. Make sure to like and subscribe. To begin with, I'll talk about this ideal entry model that I've been using that I find really easy to understand, and that utilizes both ICT concepts and SMC concepts. And this ideal entry model showcases both inducement and manipulation at the high, with the graph causing this, with the manipulation causing the downtrend from the graph that we can see here, tapping into the resting liquidity or inducement that produces a larger retracement from this graph, which causes this to spike and break the most recent high. Now we gotta understand that this is part of the bullish sentiment, and we entered within the OTE zone, targeting the most recent high and setting our stops right below the order block for good measure. And we can understand that this liquidity won't hold because we have inducement down here that has never been filled. Now if this inducement has been filled, this will be a whole nother story, and this would not be our ideal entry model. Now moving forward, we can understand that this is an entry model that I took for my ranging market, that we did see a break of structure into the upside with this becoming a bullish sentiment, although we are in the ranging market. And this is on the 1 hour time frame, showcasing that this is the most recent liquidity that has not been tapped into yet. With the most I got was this other liquidity at the lower time frame, which we did utilize later on for our pinpoint accuracy confirmation and pinpoint accuracy entry. So we gotta understand that we are in a bullish sentiment and the market, and we are using SMC and ICT concepts like I listed before. And I did take this trade on the London opening or the London session, and I did have a low time frame order block, which is right here, and the confirmation from the low time frame. I did utilize a set and forget strategy, which helped me mentally prepare for a longer trade due to the nature of this trade and the nature of this risk to reward. And there is a sign of support showing from these wicks on the 1 hour time frame, which we'll dive deeper later on to show you how these wicks gave me my pinpoint accuracy entry. Now there are no imbalances from downtrend or any significant downtrend momentum. We can see that everything is filled, and this is more or less a volatile market state that we can profit from, and it's more prone to reversals. Now the mistake I made on this losing trade is that although I used SMC and IC concepts, I used a bad mentality into this trade, expecting a 10 risk to reward profit ratio 10 to 1, and basically I completely forgot about this downward momentum and completely forgot about our market structural shift, and just set our limit right here and expected it to boom up and earn our profits, which is completely unrealistic. And our mental going into this is absolutely insane and absolutely bad. Do not try this mentality, and I'll show you later on why this is a bad trade and why this is a bad mentality. And after revising and learning and reviewing, journaling, and looking at this trade back again, I can understand what I did wrong and how I can fix this. Now I did take this trade a couple months back as a beginner when I first got into trading, and now I have learned from my mistakes and created the best entry model and the most calm mindset I can do. Now, as we can see that we have a significant downward momentum and followed by a market structural shift right around here, and we also have a heavily bearish momentum, and candle did not show any source of wicks or support from tapping into this liquidity, and the order block is already insufficient. As we can see from this tapping into the order block and the liquidity, this makes this order block inefficient and more prone to breakthrough, which we can see later on. And with the bearish structure and the unrealistic take profit and stop loss and no low time frame confirmation, this makes this trade a really bad trade. And what's important of the low time frame and high time frame confirmation that I took for this winning trade, is what really makes this winning trade a winning trade. So as you can see, when we talked about this liquidity area being a doji candle or shows signs of support when tapped into the liquidity, it really means that I want this to not only tap into the liquidity but range a little bit, signifying that there is a strong point of reversal here, that it's a high probability reversal point that I can take my trade on. And furthermore, it did not compromise the bullish structure, and it did not break high time frame structure. So therefore I realized that this is going to be a point of reversal, and so compared to taking my trade here and seeing my stop loss down here, knowing that this is already a reversal point, I just realized, why don't I just take it right here at the lowest low, knowing that this is going to reverse, and risking 1R to earn 4.7R, which is an amazing trade or amazing risk to reward for an intraday trader like myself. And understanding our HTF confluence and pairing it with our low time frame confirmation really makes this trade the bread and butter, or the most pixel perfect entry model, for me at least. Now, taking a look at this bad trade or bad entry model that we talked about earlier, is that we tapped into a liquidity with strong resistance. So we came into this liquidity, and usually what I do now is that I would wait a couple candles and look at the ranging area to signify a possible point of reversal. But in this trade, I did not take a look at, I set my limit here and I expected to take profit, but it did not hit. It obviously got stopped out because I did not know what I was doing, and I was in a really bad mental state. We can see it came into this liquidity and did not range at all and just went straight down. Now, there are cases that this might go even further down to the order block before retracing, but we gotta understand that there is unbothered downward momentum from previous candles right here, and we tapped into this liquidity before, making our liquidity inefficient, and it also broke structure and broke previous low time frame order block right here, and shows total reversal from previous candles. Now, this makes this an extremely bad state to go long on, which is what I did, being the dumb me. And so, therefore, high time frame and low time frame confluence all show bearish momentum. Therefore, this trade was not a winning trade at the start, and it should not have been taken from me when I was a beginner. And why does low time frame and high time frame confirmation matter? Now, think of low time frame and high time frame confirmation as Tony Stark in his Iron Man suit, Bruce Wayne in his Batman suit, and bread and butter. It is essential to have low time frame and high time frame confirmation. Now, high time frame gives you a broader view, seeing if there are any high time frame point of interest that might change your perspective, where low time frame confirmation gives you the pinpoint entry for the most profit, which is what I did for my winning trade. Now, high time frame can be used to see if we are going to reverse at this level, at the current level that this low time frame confirmation sits at, or it's going to continue the trend downward to a larger retracement, which is why I talked about the high time frame POIs. Now, sometimes due to the nature of the ideal market structure, ideal entry model here, we can see that there is inducement from the high time frame perspective, and if we were to look at this and low time frame perspective, we can see that this is going to go up. But if we came back down here, we are not going to hold, and we are going to continue down to this inducement from our high time frame perspective, which gives us a broader view of a larger retracement, which gave us the perfect pixel perfect entry model, and taking our profits at the most recent high, which gives us the most amount of risk to reward that we can possibly get out of in this trade, and not taking it here because knowing from our high time frame perspective that we have inducement down here, which gives us a more clear cut perspective of the market at this current state. Now, moving forward, why would I prioritize having realistic goals compared to unrealistic fantasies? Now, the word unrealistic fantasies might feel, like to more people as immature, but you gotta understand, most beginners come into trading expecting that I can turn $100 into $1 million within just a couple months. That is not happening. I lost a couple $100 before I made my first dollar, and it takes some people a couple $1,000s to make their first dollar. The trading world is a world where you pay your mistakes with money, and it takes time to build up. So my suggestion to any beginner trading is to stop trading with real money. Is to backtest. And we all can be a backtesting millionaire, but when it comes to live trading, it takes a different mental tolerance and mental maturity to actually win trades. Now, here's where realistic goals and unrealistic fantasies kick in. Now, I would much more rather have a 1 to 2.5 risk to reward ratio than to have a 1 to 10 risk to reward ratio. The reason being, having realistic goals are the number one factor to trading. You can't head into a trade expecting 10x return profit from what you're risking. Unless you're swing trading, having a 10x take profit doesn't seem likely. There's a clear-cut difference between swing trading and intraday trading. Trading is all about managing risk and being able to set realistic goals. Having a 1 risk to 2 reward and trailing your stop loss is far better than setting a trade up from 1R to 10R. Although you may win in the long run, but you're not only going to see your take profit get hit less, but also creates illusion, blocking you from seeing other possible POIs and points of reversals, which I did in my bad trade because I was so tunnel vision from that 1 to 10R. I ignored my other confluences that had happened beforehand and expected a total point of reversal at this liquidity point, which is not what happened. Now, the question comes is, are you a swing trader or are you an intraday trader? If you are looking to maximize profits and hold trades for more than one day, you're heading into the swing trading category, where you can hold longer trades with high risk rewards, i.e. 1 to 5R, 1.5 to 6R, 1.5 to 7R. You gotta understand, even in swing trading, our stop losses are much more bigger because we are only trading on the 4 hour to the 1 day time frame. Therefore, our take profits and our stop losses, sure, they do maximize take profits, but we are risking a lot more. And we only do this when we have enough confluence, and this is going to be paired from a larger retracement. So if we were to take that bad entry that I showcased above, sure, that might be a winning trade from a swing trading perspective, but that entry is the worst possible entry anyone can gather because of what confluence we had before. And if you are an intraday trader like me, and the examples I provided above, then you are looking to hold trades for a lot less longer. Examples of like 1 hour to 15 minutes, or 5 hours, or just one whole day, not for multiple days. And you're always looking for a smaller risk reward, i.e. 1R to 2R, 1R to 4R, 1R to 3.5R. Now, what did we learn today from this video is that the bad entries, we tapped into liquidity with strong resistance, unbothered downward momentum from previous candles, and we tapped into liquidity before making our liquidity inefficient. So basically, our liquidity is already inefficient, and we tapped into it once, and we tapped into it again, making it prone to broken structure, which we did break structure. It also broke in previous low time frame order block as showed before, and it also shows total reversals from previous candles, which we totally ignored. And with the high time frame and low time frame confluences showing bearish momentum, we should have taken this trade as a short instead of long. And on the flip side, we have a good entry that we showcased above, which shows support when tapped into liquidity, i.e. the doji candles and the ranging market that did not compromise the bullish strong structure, and it did not break high time frame structure, alongside the doji candles that maintained its momentum, signifying that bullish buyers are starting to kick into the market and looking to set their longs, and alongside the short positions having their take profits set there, decreasing the amount of selling power, increases the amount of buying power into a 50-50 compromise, which basically showcases the doji candles in the raging market. Therefore, we are looking for a good point of reversal there, and that makes that point a really good point to buy from. And we had our sniper entry at the lowest low, which we did with our low time frame confirmation. You're risking 1R to earn 4.7R, which is really good risk to reward, and understanding our high time frame confluence and pairing it with our low time frame in confirmation. Now, what can we do when we lose a trade, like the bad entry I had before? There is nothing we can do but journal, review, revise, learn, and keep our heads held high and move forward. Trading is all about psychology, and having a clear mind when taking trades is all that you need to win in this game of trading. Now, thanks for watching. I hope my information and perspective can deliver a new idea on your trading career. All the best in your trading life, and I hope you learned a lot from today's video. A subscribe would be appreciated if you think I deserve one, and the same with the like. Thank you for watching. I'll see you guys next time.